Hello and welcome to Real Estate in Edmonton, where we talk real estate and real life. I'm Tracy Gray, and this week we're recording live once again from the Bell just off of White Avenue here in Edmonton at the Mogul Mastermind meeting. Tonight's theme is multifamily valuation and top growth suburbs, and I'm the event host and MC, and Devin is taking us through his extensive Edmonton real estate market report with the latest numbers, trends, and insights that'll help you to understand what's really happening in our market right now. Now, he'll also present tonight's featured opportunity for the Mogul Deal Board and share a real opportunity that investors and buyers alike want to know about. So don't miss this month's Devin's deal as well. Let's get to it. With a quick MC intro from me, here's Devin with this month's Edmonton Real Estate Market Report at Mogul Mastermind.
This is Real Estate in Edmonton, helping you navigate buying, selling, investing, and living in Edmonton. Hosted by Realtor Devin Gray and professional broadcaster Tracy Gray.
So just to get a bit of a sense of what is happening in Edmonton with that, I thought this was quite interesting. So about 230 million in insured damage claims have gone through, says the Insurance Bureau of Canada. Since May. I heard this on the radio on Monday, and it said that Calgary has had about 10 millimeters of rain since the beginning of July on Monday. And so we've had a couple of rainstorms since then, but on Monday in Edmonton, it's 240 millimeters. And then Tracy and I were just talking actually, and we heard that since May 1st or June 1st, it's actually been over 500 millimeters of rain in the Edmonton area. It's just been absolutely crazy. Flooded roads, low areas. I am affiliated with the Millwoods Golf Course, and the road entrance in there has been flooded out twice. The first time it was about 2 weeks, and then now it's just been flooded again, and so they've had to bring in some temporary access. And of course the mosquitoes have also been crazy. So it's been a very interesting time in Edmonton. But anyways, we are here to talk real estate. So for those of you that are new, this is information from the Realtors Association of Edmonton. You can catch it on the REALTOR website, and it's great information. We should have some July information available probably next Tuesday or Wednesday, just after the weekend. And so some of the highlights, key market indicators to kind of give a sense of where things have been going and what's happening. I mentioned last month that we are in a balanced situation. I'd say that we are continuing to be in a balanced situation. We've had total sales in June were just shy of 2,800. That's up from May, but it's down from June. And then overall inventory is up significantly from June of last year, 22.5% up. And also new listings are up from last June. So, what does obviously that mean? When you've got more inventory and less sales, you certainly go from what last year was a seller's market into more of a balanced market. Some people might even suggest we're dipping a toe into the buyer's market. The REA will suggest that 3 months of inventory is considered a balanced market. That is argumentative with some people, but I'm obviously going by the Realtors Association of Edmonton. So last month we were at 3.1, we're down to 2.9. So again, we are floating around that balanced situation. And I also find as well that a balanced market means everybody, and I've said this before on stage here, a balanced market means everybody's kind of disappointed. You have clear winners and losers in a seller's and a buyer's market. In a balanced market, you have some people that are getting what they want, whether or not it's a buyer or a seller, and other people that continue to be frustrated. And so we're certainly seeing a lot of that in the market right now. Some more information on June. Residential average price is $484,000. We're sitting at 36 days on market. That's up 5 days from June last year, which also suggests how things are a little bit slower than they were last year. Detached single-family homes. Last month we topped up over $600,000. We're back down below that. As you can see, we've dropped down 2% from May, but that is up from June of last year. Single-family home days on market are 33 days. Apartment style condos always continuing to be the most challenging to move, and those are sitting at 47 days on market as we continue to see a softer demand. A little bit of information from our RAE board chair, Darlene Reed, basically just talking again about how more inventory, less sales, a little bit more of a opportunity for buyers in the Edmonton market. We always like to talk about the home price index. You can see basically year over year that basically this is where we were in June of last year. We cooled off in the fall and into the winter time, and then we had a more moderate springtime, and then now we're potentially starting to see the very, very slow slowdown into the fall months. Going back the last couple of years, again, you can see where we had this really strong seller's market and a more moderate spring moderate market in this year. But we're still up nearly 6% from 2 years ago. I'd like to look at Calgary. Calgary sets the tone for the Alberta market. Total sales are down from June of last year. Inventory is also down. They're sitting at 3 months of inventory. If you go back 18 months, 2 years ago, they were closer to 2 months of inventory. I think they even dipped into about 1.9. So you can see that things are certainly more balanced in the Calgary market, but it continues to also be a tale of two markets in Edmonton, in Calgary. The detached single-family home continues to be in high demand, and they are continuing to see record prices. It's the row houses, it's the apartment-style condos, and more of the multifamily inventory that's causing that. There's a glut of inventory in that area, and so you're seeing things slow down a lot more in that Calgary market there. Again, just some information from the CREB chief economist. One of the things she continues to talk about every month is how the slowdown in immigration is really having an effect on the overall market in Calgary. And that's what we're continuing to see right across the country. We talk about population a little bit later in this presentation, but Canada continues to see population decline. We're one of the only provinces that is seeing a population increase. People are either not moving. We also have a young population. Births are outperforming deaths, and then people continue to move here as well. So a look at the inflation outlook. It did drop down a little bit, 2.8% from 3.2. What we saw is the Bank of Canada held the target rate. Gas prices surged up to 20%. Travel and food costs also, again, Alberta inflation is 3.4. That is down from 3.7. Energy continues to be the big thing here. It'll be interesting to see what happens, obviously, if the war in Iran, there's a solution there, and things start to slow down in that regards, and what happens with energy prices. But as it is right now, we still have inflated energy prices. As I mentioned, the Bank of Canada held the July rate at 2.25. It continues to monitor the national economy. We would like to see an easing of inflation, but on the other hand, the economy is still too fragile at any rate. And the end of the war in Iran, as I mentioned, and the easing of energy prices. I don't touch on this too much in this presentation, but obviously we also have the trade war continuing, and there just continues to be a lot of uncertainty, and it seems like every day we don't necessarily have our footing when it comes to the national economy. Employment, 6.5% with 18,000 new jobs. They suggest the World Cup actually had a lot to do with an increase in jobs. So we'll see what happens as that has now wrapped up, and we get back into post World Cup job numbers. The provincial unemployment, it did ease to 7% despite adding 20,000 jobs. Read a few articles about this interesting situation that we have the strongest job growth in the country, and yet our unemployment continues to go up. And it's basically because of the fact that our population continues to increase more so than people are able to find jobs. And there's also a higher participation rate, meaning there's more people looking to work. However, they are suggesting the population growth should start to ease in the back half of 2026. Unemployment in Edmonton, 7.2 and 7.1 in Calgary, both cities keeping steady with these percentages, underpinned by energy, construction, and the professional centers. There's still a lot of jobs and a lot of opportunity in the oil and gas industry for sure. Look at the rental market situation. You can see that in the major markets, they continue to be down. In some of these more smaller markets, you are starting to see people chase affordability. That's why Halifax is up 3.7%. Winnipeg is up about 1%, but the rest are down. National average is down 4.3%. That's now the 21st consecutive month in a row that we've seen a decline, and I don't see any reason why that wouldn't continue for the next little bit. This is a popular slide that I hear, so I continue to put it in here. Lowest average asking rents of purpose-built and condo rentals. You can see Alberta being kind of the dark yellow here. You've got Lloydminster, for those that can't see it, Lloydminster, Fort McMurray, Medicine Hat, Grand Prairie, Red Deer, Lethbridge, and St. Albert, and Airdrie, and Sherwood Park, all on there. So, what do we got? About 8 or 9 of the top 20, or the lowest price 25. So there continues to be, again, when people why are they coming to Alberta? They're chasing affordability. As for fastest growing rental markets, you've got basically just a couple on here. You've got Lloydminster, you've got Airdrie and Medicine Hat for areas of growth. Been talking about Lloydminster for a long time. It really does seem to be a city with a future. Again, it's got low rents, but it also the rents are continuing to grow, and that city continues to grow, and there's a lot of good things happening in Lloydminster. Alberta's projected population growth. We continue to be the place to be when it comes to population growth. And when people move here, they need places to live. And that's why we're here, is because we're going to be residential providers of those people that are moving here. But it's definitely not going to be even. It was interesting to see this, which also is, I would say, very consistent when you talk about heavy areas of population. 78% of the provincial population is in that Calgary to Edmonton corridor. We're at 5 million, over 5 million people now, and 4 million live in this corridor. So when you talk about areas to be focused on, where people are going to be moving to and people are going to be needing places to live, that didn't show up too well, but I can read it here. And so anyways, if you're looking for areas for growth, number one on this list is Airdrie, and this is basically it's from 2026 to 2051. This is the percentage of population growth in these communities. Airdrie is going to see a population growth over the next 25 years of 81%. Beaumont, number 2, at 72%. The Stony Plain Spruce Grove area at 67%. Cochrane Springbank at 64%. Fort Saskatchewan at 63%. Red Deer County, not necessarily the city of Red Deer, but Red Deer County, 62%. Leduc and Devon at 60%. I'm sorry, I can't read that one. But anyway, Sylvan Lake is at 53%. The city of Grand Prairie is at 49%. And that other one is the county of Grand Prairie. So Grand Prairie is really expected to grow. And I put the number 11 at Edmonton because I wanted everybody to know where Edmonton was, and then Calgary sitting at number 14. So the interesting thing as well is, out of the top 11, you have 5 places in the Edmonton area that are growing. So when we talk about what's happening in densification and the need for more housing and all of this infrastructure and everything that's going on, is it not just the city of Edmonton, but you've got Beaumont, you've got the Stony Plain Spruce Grove area, Fort Saskatchewan, and Leduc and Devon that are poised to grow. Now, in regards to areas that are reducing, so they showed the top 100 communities, and 69 communities in Alberta are expected to grow, and 31 communities are expected to detract. I don't have a list of all of them, but basically number 1 was the Claresholm community, at negative 17%, Slave Lake at negative 13%, Smoky Lake negative 13%, Athabasca negative 13%, Edson negative 7%. So it's a great report. I took this information, I believe, from Alberta Treasury Branch. And so if you are looking on not just the Edmonton area, but any areas to consider investing in, you want to go where people are moving to. And that list basically is telling you the blueprint of where to go over the course of the next 25 years in Alberta and where to potentially stay away from. Who heard about Facebook coming to Northeast Edmonton? Put your hand up. Most of you, yeah, for sure. This is big news. Expected annual revenue to Alberta, $250 million, 300 jobs once the place is built, 3,000 jobs to construct, and ultimately improving $60 million to the infrastructure. So one of the interesting things that I heard, I was talking to a commercial agent because I've got a client who's got some land up there, and he wanted an evaluation, and he's maybe 3 or 4 parcels away, and this commercial agent was suggesting to me that that per acre up there it should be about $40,000 or $50,000, and my understanding is that Meta paid $154,000 an acre for 1,800 acres. So it has really screwed up the valuations up in that area, and of course the big question is why. There's certainly a lot of reasons potentially why, but they've come to that area with a massive amount of investment. I believe it's the 33rd data center that's going to be there, and the first one in Canada, with the rest of them being elsewhere in the world. There's other parts of Edmonton that are also growing. Hopefully, I think everybody should know this Pacific Mall on 97th Street. If you don't, this thing has been here forever. Anyway, City Council has passed the Pacific Mall to be rezoned into mid-rise and high-rise. And so this certainly would be considered possibly a sketchier part of the Edmonton area, but even pretty much every area is being touched in regards to growth. And so I actually thought this was a good news story in regards to this area of town being redeveloped. Another thing as well that we've talked about on this at Mogul Mastermind this year is in regards to some people building these 8-plexes and not necessarily using them for long-term rentals. People have been using them for lodging and that, and so this is definitely something that the city is working on in regards to attempting to curb people using these 8-plexes for lodgings, where basically it's almost more like a hotel. Certainly the argument back is that, well, these were supposed to be created to help with the housing situation in Edmonton, and so how does running these things as a hotel fix the housing challenge? So this is an area that we'll have to keep an eye on in regards to Edmonton as well. So in summary, I was looking at this from last month, and really not necessarily much has changed. We still have an inflation risk elevated. I did add the trade wars. That's going to be interesting. I believe those new trades or tariffs are supposed to be coming in on August 19th. So that's ultimately forever away. There's a lot that could happen between now and then, but we'll see ultimately if those come in. We're now 21 straight months nationally of declines. So people are starting to have to work. People continue to chase affordability. And if you have rentals, you really have to make sure you're dialed in on offering quality residences. I remember hearing from a stage long ago where they said if the vacancy rate for rentals is 5%, you want your competition to be 10% vacant, and you'd be 0, and you got to do some extra work. Alberta continues to be resilient in regards to population growth. Obviously, a big part of our economy is energy, and then the Bank of Canada continues to just basically monitor the situation. The expectation is most likely they'll hold rates. Who knows ultimately, but they'll hold rates right through the rest of 2026, and then we'll see what happens in 2027. So for those of you that are investing or looking to get into investing, certainly things have changed in Alberta from what they were the last couple of years. There's a lot more uncertainty in the world. There's a lot more uncertainty in the country. But we still are very much in an enviable position when it comes to Alberta. There's a lot of other people that would like to be in the position where Alberta is, where we still are attracting population, we still have affordability, we still have lots of jobs. It's still a great place to be. We just have to be working a little bit harder. Being in rooms like this, getting yourself educated. Some people have asked me, personal opinion. I try not to talk a lot of politics up here. But I've said this a few times, and I believe it now, is that people say, well, I think things might change in 6 months or maybe 9 months or something like that. I believe as long as Trump is in power in the United States, we will continue to have a level of uncertainty. My personal belief is he's a business person first and a president second, and he's purposely trying to keep a lot of confusion out there because it puts a lot of people on the sidelines. People don't want to make tough decisions, and in the meantime, those that are prepared to really roll up their sleeves and get to work those are the ones that are going to be successful. So keep that in mind and keep plugging away, keep working, and you will be successful. Just want to remind you that Tracy and I do host a podcast that drops every Thursday at 3 o'clock. It's on YouTube, Spotify, Apple, anywhere else that you find your podcast. So please check that out. And want to thank you very much. There's several Mogul agents in the room. So if you have any questions about real estate, please reach out. Thanks again.
Don't leave yet, Devin Gray.
Yes, I was waiting for my...
For the fanfare to die down?
Right. Yeah.
Okay,
right.
hang on. Okay, now you can go.
Okay, so I'm also covering off the deal of the month. So if you can turn around and kind of look, you'll see a kind of whiteboard over there. It's our deal board. We've got 2 deals up there. One of them I saw Adrian post, and I've got the other one. This one, as of today, is off market. It is launching tomorrow. You can go to the, well, I guess that's me needing to go to the next slide, right? So this is in Jasper Park. It's 8722 150th Street. It's a well-built, income-generating 2-story home, built in 2016 by PK Developments. It is 1,781 square feet. It has a double-car garage in the back. And it currently has a main floor tenant. That tenant has been there since 2021. It's got a legal 2-bedroom basement suite, separate entrance, in-suite laundry. That lower suite is currently vacant. We wanted to keep it vacant for accessibility and obviously just help any investor out there to work on filling it with their own preferred tenant. The other tenant, as I mentioned before, he's been in there since 2021. He would like to stay. It's a single adult male along with his adult son, who is, I think, in his early 20s. It's super close. If you don't know where Jasper Park is, it's basically if you come off the White Mud, you're on 149th Street and you get to 87th Avenue. There's a McDonald's there. It's immediately just in behind there. There's actually now a 6-story building that's been built. So it's obviously because people recognize it's a great place to own rentals. You're straight down the road to Metal Arc Shopping Center, the Misericordia Hospital, West Edmonton Mall, and you're also going to be only a few blocks away from the LRT when it opens up. That's why all of this, why that 6-story building was built, and why they don't have any issues with filling this property. As I said, the only reason they do have the lower suite vacant is because of the fact that they want accessibility a little easier for anybody that wants to walk through the property. So I've got, there's a forum up hanging up there. I've got 2 more here that I will put. It does have a pro forma in it, so you can see the numbers. And if you have any questions, as I said, it drops tomorrow on MLS, and I'm the listing agent. I can answer any questions you have. Thanks very much. Enjoy the rest of the night.
All right, now go crazy. Devin Gray, ladies and gentlemen. Woo! Thanks, Devin. There's your Devin deal for the month, as well as the Edmonton Real Estate Market Report for July 2026, recorded live at Mogul Mastermind. Now, if you'd like more information about any of the numbers that Devin covered, and you want to talk about the current market, how it may affect your plans to buy, sell, or you're just curious, you can connect with him through the comments. To watch the full evening, you can also join us inside the Mogul Mastermind School community. Now that's spelled SKOOL. Thanks for joining us for Real Estate in Edmonton. That was Devin. I'm Tracy, and be ready to join us again next week when we talk about real estate and real life.